Given the recent market turbulence, allow me to do some macro analysis. It all began when President Trump published this lengthy message on Truth Social on Friday, October 10th. He expressed his worries about what he described as Chinese export curbs and his intention to retaliate by raising tariffs significantly. That occurred on Friday at 11 a.m., and the VIX then experienced a more than 30% surge. Actually, that was the 39th highest VIX spike ever. It's the biggest one-day jump since December 18, 2024, so it's unusual. The markets now dropped 2.7%. It was a rough day, but I've been concentrating on the volatility. President Trump then took action and levied a 100% tariff on China at 4:50 p.m. on Friday. During that brief period, that led to a sharp decline in futures, which is anticipated to be one of the biggest one-day liquidations ever. Actually, the biggest since 2018, and that was related to FTX in 2021. To give you an idea, this was tweeted by someone. Cardano also plummeted from 80 cents to 30 cents. SUI rose to 56 from $3.40. So obviously a massive liquidation. However, by Sunday night, President Trump declared, "Don't worry about China. Everything will be fine in some respects." It appears that the chaos and liquidation that occurred over the weekend will mostly be reversed as October progresses. Thus, we arrive at the conclusion that VIX spikes typically occurred during the lows. Now look at this chart. The VIX one-day percent fluctuations are at the bottom, while the S&P for the last year is at the top. Additionally, as we've highlighted, these VIX increases typically occurred during the low. Thus, I believe it to be the case once more. The data actually supports this. If you examine the 38 cases in which the VIX increased by over 30% in a single day and compare them to the median forward returns, you can observe that the median gains about 3% after a month. That means that by mid-November, the S&P will have gained 200 points. All right, back to the highest points ever. Thus, we would purchase the dip. Additionally, we believe that there are seasonal tailwinds in October, and the rest of the year. In general, we should anticipate a 4% rise in the S&P between October and that's 7,000. However, as we have discussed previously, the S&P performed even better into the end of the year, up 14%, because the Fed has been on hold the entire year and will be reducing in September, which is similar to 1998 and 2024. Therefore, 7,000 is only the base case, in my opinion. Regarding Granny Stock's individual stock performance, the top 5 performers during the previous week were Robinhood Markets, AMD, LamResearchStrategy.com, and CA. Again, a large portion of this is AI. Additionally, AMD benefited from the strategic collaboration with OpenAI, which called for OpenAI to acquire up to 10% of the company. As a result, AMD had a 20% increase and hit an all-time high. That makes us pleased. For those who believe that we are living in an AI bubble, please refer to a previous chart that I created. Nvidia, which is trading at 27 times forward profits, is the most crucial firm to keep an eye on. All right, compared to Costco 48 times and Walmart 34 times, it has a lower multiple. All right. Additionally, Cisco was the same stock in September 1998, when the Fed was on and then cut, as Nvidia is now. This is as significant. At 56 ahead earnings, it was also trading. Take a look at its PE. It increased 4 times to 210 times earnings in just a year and a half. All right, so that's what I would say. Values are something that you may worry about. In the last week, American Express, Bank of New York, Netflix, Meta, and Live Nation were the 5 stocks that fell the lowest. And in terms of themes, global labor suppliers led by AMD performed the best, followed by Style Tilt. Welcome back. As CEO Tim Cook travels to that crucial region this week, new data from IDC indicates that Apple is beginning to see a recovery in China, with shipments rising less than 1% from the previous year. Today's Tech Check features more from Steve Kovach. Steve, yes, Leslie, continuing the momentum that was shown in the most recent earnings release. However, as you can see, Tim Cook is currently on one of his many trips to China, which is, of course, Apple's most significant overseas market. Yes, he did receive that specially designed Labu. Take a look at that adorable creature, which caused PopMart's stock to surge yesterday and briefly disrupted the internet. However, He is also there to play politics and advertise Apple's new iPhone 17 series, as the company's business in China is beginning to improve, partly because of government subsidies that effectively decrease the price of some of the lower-end iPhones. Additionally, there is already evidence that the base variant of the iPhone 17 is selling well in China. You see, Cook is playing both sides here. Cook pledged fresh investments in China, as reported by official media, but the news lacked key details. In an effort to evade the harshest of President Trump's tariffs, he is also trying to shift additional manufacturing outside of China. Cook's departure from China has been further demonstrated in the past few hours. For instance, Bloomberg reports that forthcoming devices like a tablet for controlling smart appliances and a security camera would be built in Vietnam, while Reuters reports that Apple is campaigning to modify a tax legislation to receive a cut on manufacturing equipment, and all of it aligns with the plan Cook outlined in May when Apple was most threatened by tariffs. Thus, Apple intends to gradually shift as much of its manufacturing of iPhones headed for the United States to India, and it is succeeding. For instance, analysts at Jefferies predicted last week that only roughly 9 million iPhones will be imported from China this year. Other items, such as Macs, watches, and AirPods that are headed to the United States, are already manufactured in Vietnam before being sent there. Speaking of those other gadgets, Apple today unveiled the Vision Pro, a new iPad Pro, and new MacBooks. The goods are identical, but they include a new chip, the Apple M5, which is obviously more powerful than the ones that came before it. Now, Steve, compared to some of its other major IT competitors, Apple seems to have escaped with little harm. As it relates to sort of being in the midst of these geopolitical tensions, I'm thinking in the chip space. Do you think that will go on? Do you think Tim Cook is handling things as he should, or something? Can he actually sort of move down that road in a way that gives both sides something to be happy about? Indeed, and we can discuss what's happening on the chip side. Today's M5 microprocessor is a prime example. Leslie-it is designed for consumer goods, rather for artificial intelligence training, as Nvidia or AMD aims to do. This only applies to personal goods. Nonetheless, there is an AI component to this situation because, as part of the geopolitical dynamic, Apple is actually relocating some of its production from abroad to a new facility that is being constructed in Houston, Texas, where they will be constructing some of those AI servers that are powered by those unseries chips locally. That private cloud network is what drives Apple intelligence, not as much money sloshing about. So it's a little different from what you might be seeing from OpenAI and Nvidia and all these AI mega deals that we're making. Whether it's the hardware or Eddie Q's remarks regarding Apple TV this week and its services, it's been a busy week for Apple. Thank you for that. Version *** that retains the same meaning and length but does not use fillers like ERM or you know.